The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman again, sitting in for Larry Pesavento. Larry will be back tomorrow. My pleasure to be here on this 27th day of April. Can you believe 4 months gone, third of the year? Whoops, just gone. So we're looking at the 2-minute chart of the E-mini right here. You'll see that in the Chapman wave methodology. Oh, I forgot to do that. I'll do it right now. Here we go. In the Chapman wave methodology, we're always looking for 4 higher peaks. That's really the crux of the pattern itself. And what's really important about this particular pattern right here is that there was a rectangle formation formed from about 3 o'clock this morning all the way through until the breakout at about 7:15, and it went to 5 higher peaks to that peak E, and they made this cup formation up at the top, which I call a double top falling axe pattern. I'm sorry, a double top pattern right here. And this double top pattern, which is an inverted H, if it pulls back 1/3 to a half of the left side lip right here, and that is at 2386.50, and the low was the cup trough at 2384.75. If it pulls back 1/3 to a half, be careful because you could go 1-to-1 to the downside. Then that inverted Y pattern becomes the H pattern, lowercase h. And you can see we've got the H pattern here. What I wanted to show quickly was, as we're starting this program, what we're looking at is rectangle. I have an expression that says rectangle formations can last a lot longer than your patience. Have a look at this rectangle. This is the one I was speaking about earlier on. That was yesterday. That was the break, and that went to, in the 10-minute chart, went to a peak E, the 5th highest peak, made almost like a cup formation or really a rectangle, pulled back and went right back into the trading band. And there you can see that trading band, and this is going to make it really important. So to sum up, in the E-mini trading at 2384.25 up 2 points. Any break into the 2387 to 2388 area says, aha, now we could try to visit the 2390s. That was that quick trading range that occurred after the bell yesterday. Was that 8 o'clock yesterday? No, that was yesterday morning. And then there was that pullback. So now what we're going to be looking at, this is a 10-minute chart. And on the downside, any break into the 2378s, and I would suspect, and I'll go through it right now, I want to go through this on a shorter-term basis. This is the Dow 120-minute chart right here. Forget that little part there. This part here, it's gone to the 5th highest peak at 21,070, and it's called the Chapman Wave 5. The same chart has the MACD and the stochastic. You know, Larry does not use the moving average, convergence, divergence, or the slow stochastic. Larry uses both Fibonacci. He uses the Gartley pattern. These are 2 triangles placed in a particular pattern, and if they expand, they go to they go to a butterfly pattern. So I could be drawing that, and sometimes I do that, but I find that just because I've used I believe very strongly that the methodology that you use and that you maintain, that you get to know extremely well and stay with it. Anything else that you learn should be cumulative. It should become yours. In other words, when someone does one of my courses, they should not look at me and say, oh, is this whatever it is? They should say, together with my technique, a little bit of your technique says there's a chance that, and then all of a sudden it becomes theirs. It becomes your own personal property, rather than always having this question. Occasionally in my own work, there's an alternate count, and that alternate count, even that has a methodology attached to it. So let me make it real clear. The Dow has 20,959 as the 9-period exponential moving average in the daily chart. If there is any weakness, if you see the Dow trading, what I said to subscribers to my opening call This morning, very comprehensive newsletter. Actually, let me just show you this right here. First of all, let me move this other computer away so I can see clearly. There we go. I show a bunch of things. For instance, right here, I send out both to subscribers and I actually send out to the den. This is a chart of the E-mini, and it shows you the daily has gone to what I call a gray leg B. It's actually a peak B right now if it doesn't make a new recovery high today. But it's underneath the previous major peak D that was formed at a Chapman Wave 5 in the daily chart right there, 2397, back on the 1st of March. And that's the Dow. So what's really important here is that you've got this cup formation. You remember we were talking about the cup formation just a moment ago? Now, it's so fascinating that patterns repeat. They're like fractals of human nature. So that the pattern you see in my 2-minute chart can be repeated in a weekly chart. It could be repeated in a monthly chart because a pattern is a price point of human emotion. And that never changes. So what we've got here is that within the weekly chart, we've got that cup formation. I'm anticipating there's a chance by Monday or Tuesday that we've formed some kind of a double top, and then we've got to be very careful the following week. That is next week itself. This is the 120-minute chart made a peak E, pulls back, and there's that arch with the cup formation. 2 fighting candidates. Why are they fighting? Because the stochastic's making a W formation way down 11%, which says, yeah, it could pop up a little bit, so be careful. And the other says that the MACD, the moving average, these 2 moving averages are just so strongly to the down mode that it does make upside holding the upside quite difficult. And so I discussed that. I also give an overview. Overview and market today. And these 5, I love to say my 5 quadrants, shows you that there's a cup formation in the 120-minute chart of the Dow. There's an arch formation with the left side, right side price symmetry in the 120-minute chart of the VIX index, the volatility index. And what's really fascinating about this is that within the context of the mirror image that you see often, so often, in fact, in the Dow, in the way the fear factor of the VIX index, and it doesn't have to be the Dow, but of the market indices can show themselves. It's almost like gold and the dollar have that mirror image a lot of the time. So you've got that here. I'm suspecting that this arch formation in the VIX index is going to see some kind of a bounce to the upside within the next 3-4 sessions. That's 3-4 days, even though I'm looking at the 120-minute chart. And that says that the upside might be starting to become a little bit limited in the Dow, and we could start to see some kind of a pullback. And then this is the Richard Arms Trin Index. And I use it as a Trin gauge, just using particular numbers. There are no numbers flashing here, so there are no signals. And this is the daily bar chart of the Dow, which is in leg B, gray B. But this is a D, interestingly enough, in the S&P. So I talk about Ds, and we'll talk about that as soon as we get back. Let me just show you something as we're going back. Here is the objective of the Chapman wave. A, B, C, D is where other things can happen. Basil Chapman sitting here for Larry Pesavento. I'll be right back, and we'll continue looking at the markets as soon as we get done with these very important commercials.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman sitting in for the one and only Larry Pesavento, doing my best here. So the Chapman wave objective is from an identifiable low bar, merely to count each successively higher peak alphabetically, uppercase A, B, C, D. It can go E, F, G, but D is really where other things can happen. You'll see how many times that occurs. Let's just go to this is what I showed subscribers this morning. There's that 120-minute chart, and this is the daily, and you can see there's kind of like a cup formation forming, which says that there's like almost at this point, if the Dow can get to the 21,020s, 21,070 it hit yesterday, and if by Friday at the close, if it can get even, well, we've got some really important NASDAQ stocks with earnings this afternoon. So if overnight the NDX 100 just soars because of the announcements are so amazing, you could see that the Dow could be dragged back up to the 21,169 high. And this is what I discussed here. What's happening here? The MACD and stochastic are good. Stochastic's not, it did move up nicely, but it's not great. It's not over 80%, but it is giving support, and that's the support that you're seeing on any pullback. Anyway, I go through this and I go through different stocks that we're looking at. I had one stock that I did the analysis exactly right, and then what did I do? I didn't give it as a buy, and that's always upsetting. Which one is that? Yeah, I gave this. This is what I showed the chart when it was down there. We were going to get it last week. We didn't, and it did exactly what I looked at. The left side, right side, cup formation. There's the daily. Here's the weekly. I drew in that circle, that semicircle, that oval pattern, and it said that it should possibly go to a higher high. There it is in leg C in the weekly, and the monthly is now testing the upside resistance. So that's what I do, and I give a whole report here, and I discuss having missed it. I'm not afraid to say I missed it. I'm embarrassed to say that I missed it, but yeah, a miss is a miss. Okay, so now let's go back to our nitty-gritties. We're looking at the E-mini. I wanted to show you this because we've had a little time now that's passed. So you can see we're testing peak C1, peak C2, getting to that high, trying to, attempting, at least in the 10-minute chart, attempting to try to take it out. I think we could go to a D, but most importantly, how I'd say to subscribers in my overview section, how the Dow is handling the 10 minutes past 11 Eastern time this morning. If the Dow is up 40 in the plus 40s, the S&P is up plus 5 or plus 6 and holding, and the comp index is up, rather than the Dow minus 30 and the S&P minus 4s at 10 minutes past 11, that will probably give you the direction for the day. And it is at the end of the month. This is where the buying starts to come in from fund managers. So, okay, now let's go to the nitty-gritties of looking at different sectors. If you're looking at gold has been struggling. It's up $3 at 12.67. It was up a little bit more earlier late last night, about midnight, it was up. Now it's just kind of pulling back. And one of the things that I'm looking at is that the weekly chart, we discussed this yesterday. We were looking at this, and we had a good discussion about the different patterns that we're looking at. And what we both concluded was that the weekly chart of gold had held going to this apex. And apex means that the price point is narrowing, and for me, it's also looking at Chapman wave trend lines. In other words, this is what I call Chapman wave inside track repellent zone. That green and red declining dashed line, a set of lines, a little channel, or you can call it these parallel lines, and there's this resistance line which is acted as resistance, and below it is a support series of two lines, which is the propellant or support zone. The MACD is rallying, the stochastics at 90%, very good, but flattening out. And so far, the 9-period moving average of 1258, that black line has held very well as support. So we both came to the conclusion that there was a good chance that gold could hold quite well. And I say to him, before wanting to go long, I'd wait a little bit to see how 1260 to 1255-ish area holds if there is a pullback. And we've got dichotomies all over the show, meaning there's a divergence. Look at this. The dollar should have been running sharply with gold pulling back, and yet look, all it's done is made the arch formation, and it's at the lower end of the arch. It hasn't broken back above 99.45. The dollar's trading at 99.05 right now, and it just hasn't got the strength. The stochastic is getting to an area 10% that says it could have a bit of a bounce. The MACD is very negative, but the histogram's just improving a tad. And here you are. Once again, there's that rising trend line. It broke under it. The whole week it's been under it. Let's see what happens Friday if it can close back in. Back in means that it needs to get above 99.50. That's it's only 50 cents, but it's really struggling. And the other thing is a breakout to the upside says that if gold, the dollar can actually get to the, I want to be accurate here, can get to the 100.70 area, so 99.03 to 1.75 points, almost 2 points higher by Friday. Friday's close, tomorrow's close. That'll be really good action. The monthly chart is trending negatively, but overall it's still holding extremely well. It is just a tad under the 9-period exponential moving average. The weekly chart hasn't closed underneath the 9-period moving average since it broke down back in since it broke back in July of 2016, August, September, and then in October it started to power above, going to its recovery high of 103.82. So this is very important. Why? Because usually there's this mirror image. Somewhere I've got a chart, and I don't think I'll be able to find it now, of how gold and the dollar invariably go in mirror image. No, I should not say that. They should go opposing trends, because mirror image would imply the percentages are the same. No, means that if the one's going up, the other could be going down. It doesn't give you a percentage. Every once in a while, maybe 6 to 8 weeks, every 4 or 5 months in the year, they'll trend in the same direction for a little while. So this is a little unusual. Not only that, if I can put it together, if I can show you bonds, made a peak F top in the Chapman wave. It's starting the arch formation. You can see even the MACD is turned and crossed negatively. The green line, the 9-period differential, boom, goes underneath the slow-moving average. Stochastic's way down after being up in the 86 area. It's way down at 43%. Not good. So bonds are suggesting that yields are going to, at least in the shorter term, go a little bit higher. And that says to me that sometime next week, I think you're going to get a turnaround. because of this H pattern in the weekly chart of bonds. I think you can see it a little bit better if I go to the TLT. You see the TLT right now at 121.71, down 41 cents. I don't have time to go into, well, I'm not sure anyone's even interested. I believe Larry's clientele look at somewhat different aspects of the market. So I'm just going to say this very strong leg in the TLT, the Lehman 20-year T-bond fund, stalled and made an oval pattern. I call that the leg, I call that the body. Then it goes into the neck. The head is usually just an inverted V, and especially if it's DE or F and turns around at, in this case, the 200-period moving average. And then it comes down, and that's the beak. And the beak, when it finally stops, it's very positive for a short while. We'll talk about that when we get back. That might correspond to some double topping in the market next week. Basil Chapman sitting in for the one and only Larry Pesavento. I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back. So Basil Chapman sitting for Larry Pesavento. My show is at 11 o'clock, 11 to noon every day, the Tiger Technicians Hour. Dow's up 20 at 20,997. S&P is up 2 at 2389. I just wanted to show you this. Remember we were talking about the peak Ds that are so important in my work? Well, remember I put in a Chapman Wave C1, C2 in the 10-minute chart. I said there's a chance that we could still make the D. We've just gone to the D. And at this particular point, we've got to watch it really closely because I'd say above 2388, 2387 to 2388, you will automatically want to go to the high bar of 2390.25, the high bar of 1540. That would be 20 to 4 yesterday, just before the close, as it was pulling back. And if there's a break below, at least at this point, a break below 2383, it could test the low of 381.50. Yeah. So, okay, that's the 10-minute chart. We can always go to the 2-minute chart. Now that spiked up. The very opening spike could fail sometimes to give you a D. It doesn't always happen, but once in a while, because it's an emotional response at the opening, that could happen. So we're looking at this, and I should have done this. That E should be an alternate count here in the Chapman wave. F/C says, just be a little careful because you've just opened. Larry always talks about amateur hour. Funny, he talks about amateur hour. In the classic sense, I couldn't disagree with him at all. But in the trading sense, does it matter to me when in my work whether it's the opening, the close, the middle, the hour? I'm looking at chart formations. I'm looking at the MACD, the stochastic. I'm looking at patterns. So that's what I look at. I don't, because it's a very short. I tend to trade for my own purposes, intraday, just real short term, in, out, because my time is limited. I don't have all day to sit there watching it, so I've just got certain time periods. So the schematic, and I love this because I've been using the term schematic for a long time. It took me years to remember what the term was. A long time ago, when I used to teach music, I was a professional clarinetist. I used to teach clarinet and other instruments I also conducted. I had a student, Chip. Chip was the son of a physician, and that physician also played the bassoon. Never did meet him. And Chip was a wonderful young man, and he was just a very good clarinetist. And one day he came in and he looked at me and said, yeah, I'm using this schematic. I thought, schematic. I had to look it up, schematic. And then I looked up and said, oh, man, that's a great word. Then I forgot it for a long time. And then about 3 years ago, I recalled my wife had met him, actually. He, too, now is a physician. And so she had met him at work, and suddenly it came to me, schematic. I love that. So here's the schematic. Lowercase h goes to a lowercase m. Here it is. So the yields are in a trading band. Let's just put it that way. And so far, the Japanization of our bond yields, that means the yields going close to zero, very low, still remains in force. We would see a complete change if the T-bonds actually went where they are right now at 152.5. If they ever broke and went to under 100, closed under 144, I'd say about 143, the very long term. Have a look at this. I haven't done this for a long time. Have a look at this. Look at that trend. I'm going to go to @US, and I think I have to go .P. Let's just see if that works. Yes. Oh, no. I lost my trend line. Maybe it was US. Let me just see what I get. Oh, there it is. So this is the United States. Now, I wanted it going all the way back to the 1980s. So let's go D. Is it E? Let's go D. D. Nope. US.D. Oh, what a pity. I'll find it. I'll figure it out. Oh, it's a TYX. $TYX. There we go. Okay. If you're looking at yields, look at this. This is the 10-year T-note yield, and I'm going to squeeze it, and I'm going to tell you something that'll shock you. This is a monthly chart, and it's going back. Let me squeeze a little more. It's going back to the September 1981 high. Now, these numbers get smoothed out because it's a continuous contract, but let's call it 152 high back in September of 1981. 152. Remember, we were talking 15%. This is a 10-year, and now it's at 2.9%. And look at this incredible down channel from the 1987 crash, October crash in the Dow. That's where yields started right there. That's October 1987. just a continuous, fantastic down channel. Look at that. Look at the way the down channel, remember we were talking about the inside track? Look at that pink line and look at this dashed line right here. It's been stuck in that. Let me make that a little bit clearer. Oops, I didn't mean to do that, but I did mean to do that. Look at that channel. That is incredible. I must do this correctly. There it is. Okay. There you are. There's the Chapman wave inside track, and it keeps going there and it keeps pulling back. So far, lower lows and lower highs just continues from 1987. Is that a channel or is that a channel? All right. Enough with that. Let's get back to the nitty-gritties. Since it's Larry's show, I had a couple of questions. I hope I can do this correctly. Here we go. Yeah, there we go. Okay. I wanted to show you a couple of things. Look, W is wheat. Wheat is just now starting a little bit of an upturn. One of the things about the arch formation or the inverted V shape you can see in the weekly chart, these letters have slipped because it's a continuous contract. I have to lift them up. So that's a B minus, that's a failure pattern. And look at that. What a perfect left side, right side price time match from that low to that high to that low breakdown. And it closed underneath the left side low. So that says there could be a rally in wheat. And that wheat rally, it says, if at 429, up 2.25 today, if wheat is able to get by Monday afternoon, Tuesday morning, anywhere into the 433 to 434 area, that weekly chart will start to improve with the stochastics at 15% trying to cross positive, and you've got a trough, a leg G to the downside in the wheat continuous monthly. If the wheat does not hold a rally going to the 440s by the end of next week, but instead takes out 424 to the low that was made 3 days ago, or 416 takes that out. I'm looking at this and I'm saying that TRCCI, this is the Thomson Reuters continuous, this is the commodity index, Thomson Reuters continuous commodity index monthly chart, and it shows you the arch formation that's forming. If the commodities don't get a bid, that's going to say that the administration, last administration and this administration's desire for slightly higher prices to get some kind of inflation. You want a little bit of inflation. It's usually a good thing to have slightly higher yields and a little bit of inflation because it creates the tension between worrying about overinflation and no inflation, deflation. And it's preferable not to go to deflation, but to have some kind of inflation. So let's look at this in a little bit greater detail when we get back. This is the continuous contract of the commodity index, which has just been making lower lows. Basil Chapman sitting in for the one and only Larry Pesavento. Dow's up 12, S&P's on. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays, and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi everyone, Basil Chapman back, and we're looking at the 10-minute chart of the E-mini. Remember I said we should go to the leg D. D is what we need to do. We need to look at why, because in the Chapman wave methodology, if I can find the darn thing, let me move over. There we go. Right there it is. Okay, the objective is to get to a D, and at D, other things can happen. Could go higher, could go lower, could go sideways. You can get the Chapman wave instant restart. You get whatever. Well, that fourth highest peak, uppercase D, is exactly what we got right here in the E-mini in the 10-minute chart. There's been a sharp pullback. One of the things we're looking at is the MACD's gone down, stochastic's gone down. It's sharply under the 9-period moving average, and you're about to get a cross between two moving averages, the 9 and the 18. So we'll see how this pans out. I'm sure there's going to be buyers because the theme right now is you really have missed out if you haven't been long, so you got to buy every single dip. And I think that's part of bringing a lot of people in over the last week, especially going into tomorrow and maybe Monday. That's why I'm a little cautious about coming up next week. So the question I had during the break was DBA, which is this is the Power Shares DB agricultural fund. I know it's trading at 19.38. We've had it before in my opening call service. We've had it for a long time. We had it, and then we just didn't have it at all because it's just been going down. I still think it's not the place to be. It's getting closer to some form of support in the weekly. I suspect next week's going to be really important for a lot of things. Let me just show you this. Amazon, I'm skipping over when I said next week's important. I want to explain why. I just explained in the commodities. I explained the divergence between the dollar and gold. I wanted to just continue the theme. Look, you've got Amazon at 9.15, up 6.30. The all-time high on the 5th was 923.72. In my work, it's gone to a gray leg A, and then a peak A, a gray leg B, which it's in, which is under the previous high. Now, it's really important. Let me move this over because there's a chance, and that says these are the conditions I'd be looking for to sustain a move to the upside in Amazon. The monthly chart has gone to a peak here. It's in a 5, but that 5 can be moved over a tad because there's another technique within the Chapman Wave 5 that suggests that there's a possibility you could go a little higher and still keep that 5 going. And it's leg G/C. This is a monster, Amazon. It is a game changer. And what we've seen and what people will be talking about in 50 years' time, just as going into every century close for the last 400, 500 years, there's been something there's been an invention that leapfrogged over anything that people could even have thought about, whether it was electricity in the late 1890s that became so pervasive, whether it was automobile, basically invented in earlier, it was in actually 1840s, 1850s, but really we think of the invention of the automobile, certainly with Benz and others like that, back in the 1880s. And then that just leapfrogged into the 1900s, into the 20th century. Alexander Graham Bell, you've got telephone. And then, of course, the whole 1980s, we saw the whole thing with technology. It started in the early 1900s and in the mid 1900s, but it was really the 1980s with Apple really starting this leapfrog of technology into the 2000s, into the 21st century. So Amazon has leapfrogged in their own way the whole thing of online marketing, etc. So these are systemic changes. These are tidal changes, and that's why Amazon is one of the great companies. And if it still remains Amazon.com and hasn't been bought by somebody, you'll look back and say, oh, like the General Motors of the 1920s, or we're looking at DuPont of the 1920s. We're looking at industries being built right now that should go right through the 2000s into the 22nd century. And Amazon has just started that whole thing, like Eastman Kodak did. Maybe on the way something happens. But at this particular point, these are the companies. Facebook, look at this. So Amazon, does Amazon come out with earnings tonight? I forgot to look. I think it could be, but we've got some of the big high techs. Look at this, Facebook screaming at 146. Just seconds, an eye blink away from an all-time high. Leg E in the weekly. So I think that they're becoming somewhat overbought. And that says to me that we've got to be a little bit cautious here, but the monthly charts are still spectacular, and certainly in the down, the S&P, the IWM, the Russell 2000. So yeah, I've got this as a potential leg E in Google. So anything happens says, yeah, you might spike to the upside, but they might be talking about looking out next year. I mean, in the next quarter, whatever it is, I don't know. I'm just saying that they've done spectacularly. Most of the news is right there in the stock. When you get this giraffe-like spike to the upside, breaking all the resistance points, the MACD's fabulous, stochastics at 95%, so maybe it chops around. But I'm thinking that the upside now is limited to maybe a spike of 3 to 7% in Google for Alphabet, but the downside could be time and somewhat price, and a bigger percentage move to the downside if it starts to pull back. So I'm looking at that and I'm saying, just got to be a little bit. You got to be a little bit careful here if you were to buy a good earnings report in these stocks at this particular time. So a couple of things that I was asked about. Let's do that. XLF, the financial. I'm a little disappointed. I think that the financials had quite a nice run. Bank of America 22.89 to yesterday's high, just above 24. But what, a point and a half? It's just 5% or so. When in fact the general market has had such a spectacular run. Oh, I see. I saw Steve Rhodes in the den. Congratulations, Steve. That was a terrific half-hour workshop you gave last night. Bravo. A lot of valuable information. Really good job. Thank you. So the XLF, this is the S&P Select Financial Spider. So what I'm really looking at here is that within the context of the overall market, there is a chance that we are, the QQQ series, still acting beautifully at all-time highs. PowerShares Trust series, leg C in the monthly chart. My monthly chart suggests, regardless of any kind of pullback, even if it's a 10 to 15% pullback coming up, say May into June, the monthly charts are spectacular and looking really good. An incredible smash to the downside would have to take place for them not to go to higher highs in 2017. So the QQQs has that pattern as well. It's not quite the Chapman wave squash, which says you can go to a leg very quickly, but it is G/C, and I suspect there's one more bounce to come, and that bounce could be a flurry to the upside. But I think that the upside now is becoming a little bit more limited, and the downside percentage-wise says be a little careful. Too many people have just started to pile into stocks. I hear it all now. I'm hearing it amongst friends that never even spoke about the stock market for about 6 or 7 years, well, since the 2009 lows. So that's making me a little nervous. Let's just go back to what we were looking at here. There's the 2-minute chart. It pulled back quite sharply, 383. Now it's bouncing back. And this to me, let me just do this really quickly. See this 120-minute chart? What I really want to see is that we're wrapping up. No, I can't remember. Yes, I don't remember if we come back or not. I should remember.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So you remember I was speaking about this rectangle. A rectangle pattern can last a lot longer than your patience. And look how it popped above that rectangle. It went higher at noon. Was it yesterday? 1 o'clock, 2 o'clock? Yeah, that was noon yesterday. And then it pulled back. Where did it go? Right back into the trading band. Now it's trying to pop back up over it, coming back into the trading band. So I'm looking at this and I'm saying, I would not be surprised if at tomorrow's close, the monthly chart of the Dow does not make an all-time high. Of course, with the big earnings coming out tonight, you could see an explosive move into tomorrow. I'm thinking that maybe there's a mixed market coming up. So that's kind of what I'm thinking. So there are stocks. And what do you do with stocks that really scream upwards? Athena Healthcare was one that was on my list for subscribers this morning. I didn't put it on the list that I'm looking at. I thought, look, it's gone to a leg E. It was right there. it looking really good. I'd love to see a pullback because this is in the right care, Athena Health, electronic medical records. Bam, it moves up 3.5 points today. This is very tough to get on board some of these stocks. You got to either close your eyes and just grab it or not. So Microsoft this afternoon, we're just about to wrap up. You're going to go to Tom O'Brien, gives a fabulous wrap, kind of an overview of what he's looking at in the next, at 10 o'clock exactly. And that is the everbank.com report. And then Tom and Tommy together. I'll be back at 11 o'clock for my show, the Tiger Technicians Hour. Then you get Think or Swim. You get Steve Rhodes. You get Dave White. You've got Tom O'Brien again. Thursday, you've got who have we got there right at the end? We've got Andy Hecht. So this is a great day for listening. I'm going to just quickly wrap it up and say what I'm looking at is kind of a mixed market. I was going to show you the Dow 120-minute chart pulling back a little bit. I would love to see a peak today, maybe a kind of a bounce on the upside, and the Dow and the S&P just missed making new highs, and I get this kind of double top for next week, and then we start to see, is there going to be a breakout, or is there going to be a pullback? And then I use that cup formation, 1/3 to 1/2 of a pullback, and you've got to be careful. So have a great day, everyone. Thanks for being here. And Larry, of course, will be back tomorrow. I'm sure you're just dying to have Larry back, so am I. Have a great day. See you. I'll see you at my show.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.